What's up, everyone? Today, we're diving into the earnings report Wall Street has been waiting for like it's the season finale of the biggest show on TV. Yep, NVIDIA just delivered another jaw dropping quarter. I mean, numbers so wild they look like they belong to a tiny startup, not a $4.4 trillion mega giant that basically powers the entire AI universe. Grab your GPUs because this one's gonna be fun. First off, the headline numbers. Revenue $46.7 billion, absolutely soaring. Year over year revenue growth plus 114.2%. Net income plus 144.9%. EBITDA plus 141.6%. These look like early stage disruptor numbers, but no, this is NVIDIA. Also, GAAP gross margins 72.4%. That's we print money now territory. And if you think that was the whole show, nope. Their data center segment, aka the beating heart of the world's AI boom, grew 56% YOY. Still on fire. So what's Wall Street thinking? Oh, just something slightly absurd. Fiscal Q3 revenue estimate, $54.8 billion. Whisper numbers as high as $57 billion. Profit per share expected to jump 53.8%. And guidance for Q4? Apparently, whispers are floating around for $64 billion. But some analysts, like Mizuho's Jordan Klein, say the stop doesn't move higher unless the rev guide is over $65 billion. No pressure, Jensen. Meanwhile, the stock already moved. NVIDIA closed after hours at $194.66, up sharply. Options are pricing in a big 7% post-earnings move. Buckle up. Here's why Wall Street is obsessed with NVIDIA. They own over 80% of the AI hardware market. They've got the full-stack ecosystem, CUDA, software, networking. The new Blackwell platform is coming. Their product pipeline is stacked. They still have potential China exposure worth $5 billion in shipments. But here's the catch. The AI boom is so intense that each quarter needs to be not just great, but Olympic gold medal while breaking the world record great. Investors now want multi-year revenue outlooks, backlog clarity, confirmation that AI demand isn't cooling, proof the order pipeline is expanding, and reassurance that everyone isn't switching to custom AI chips. Even with a forward P of 39.7 times and a PEG ratio of 0.76, bulls still think the valuation is totally justified. But again, that bar is sky high. So what should we watch? Key catalysts next. Q4 guidance. This might be the most important number of the year. Commentary on AI order pipelines. Any hints about new verticals and markets? Risks? The broader market is a little nervous. S&P 500 is down 4.4% from its peak. It also closed below the 50-day moving average. Market volatility is rising, and NVIDIA has a beta of 2.27. Translation: if NVIDIA even slightly disappoints the hype machine, this entire AI rally could shake pretty hard. And options? They're implying a 7% swing on earnings. So, yeah, expect some fireworks. Let's zoom out. Bull case. AI infrastructure spending could hit $3 to $4 trillion by 2030. NVIDIA's moat is monstrous. Hardware, software, ecosystem, deployment. Blackwell and future product cycles are accelerating, not slowing. Bear case. Custom AI chips from hyperscalers. XPU competitors. Or simply, one quarter that's good, but not insane. Any of those could slap the valuation down hard. We're in a weird moment where NVIDIA has to be perfect every quarter to keep the narrative alive. NVIDIA delivered another absolute monster quarter. The company is still the undisputed king of AI, but expectations around it have grown so huge that even amazing might not be enough. The next chapter depends on Q4 guidance, China traction, AI backlog clarity, and Jensen Huang continuing to sell the AI dream that's been carrying this whole market. If he nails it, the rally keeps rolling. If not, we could see some real volatility. If you found this breakdown helpful, smash that like button, subscribe for more real talk market explainers, and drop a comment. Do you think NVIDIA's AI dominance lasts for another decade? Or are we nearing peak hype? And remember, this video is for informational purposes only and not investment advice. See you in the next one. Waving hand.